Welcome to The Explainer, where we break down the big stories behind the data. Today, we are diving into the wild world of shipping containers. And believe me, it's a story of a massive, massive boom, an equally dramatic bust, and what it all really tells us about the health of the entire global economy.
Okay, let's start with a number that just shows you how wild things got. In 2024 alone, the global fleet of shipping containers grew by a staggering 13.5%. I mean, that is a year of absolutely unprecedented expansion. But, that party is definitely over. Fast forward to the forecast for 2026, and that explosive growth just slams on the brakes. We're talking a slowdown to a mere 1.8%. That's not just a cool down, it's a cliff edge.
So this massive swing from all-out expansion to a near standstill, well, it tells a really fascinating story about the pressures on global trade. So the big question is, what on earth caused this? Let's break it all down. First up, to really get a handle on the bust, we have to look back at the boom of 2024. And it wasn't just one single thing. It was this unique, kind of perfect storm of factors that sent the demand for new containers absolutely through the roof. So this perfect storm hits the global supply chains. You've got massive port congestion tying up ships for weeks in Europe and Asia. Then there were these unpredictable U.S. tariffs that just threw logistics into total chaos. And on top of all that, the Red Sea crisis forced ships on these much, much longer routes around Africa, which meant the containers they were carrying were stuck at sea for way longer than usual.
And all of this chaos, as you can imagine, led to severe shortages of containers in all the key shipping hubs. So shipping lines and leasing companies, they had no choice. They had to place massive orders for new ones. Not really for growth, but just to keep goods moving at all. It was a complete and frantic scramble for more boxes.
So yeah, that was the boom. But as we all know, what goes up, well, it's got to come down. And when a market expands that fast, the hangover can be absolutely brutal. And that brings us right to the inevitable market correction.
And this chart right here, wow, it really puts the scale of that correction into perspective. After a record production of 8.3 million TEU, that's the industry standard 20-foot equivalent units, in 2024, the output is forecast to just plummet to 1.86 million in 2026. You can basically hear the factories going quiet.
And the reason for this whole downturn? It's actually pretty simple. The system is now totally flooded with containers. All that frantic ordering in 2024 created a massive oversupply. By the middle of 2025, there were something like 1.5 million brand new, totally empty containers just sitting in yards across China. Now, with way more containers than cargo, the prices for new boxes just fell off a cliff. They hit a low of just $1,650 for a standard 20-foot container back in May 2025. That is a huge drop and a really clear signal of a market in serious distress. And the pain wasn't just for the new stuff. Secondhand prices also tumbled. In just the second quarter of 2025, prices for used containers dropped big time, with some types falling almost 18% compared to just the previous quarter. Okay, now this is where it gets really interesting. How the two main players reacted, because they did it so differently. The giant ocean carriers, they used their big cash reserves to just snap up all these cheap boxes, growing their own fleets. But the leasing companies, the ones who rent containers out, they're now focused on selling off their excess supply to try and fix the imbalance.
So, after all that chaos, what does the future actually hold? Let's take a look at the forecast for what people are calling the new normal in the container world.
Well, the outlook is pretty much one of slow, modest growth and just trying to find some stability. The global fleet is expected to get to about 65.5 million units by 2029, but let me be clear. Nobody is predicting a return to the crazy boom times of 2024. The name of the game now is managing the glut.
But, and this is a big but, the recovery is going to be really uneven. So while the price to buy a new container is expected to stay pretty low, the price to lease one is actually forecast to bounce back much more strongly. In fact, it's expected to even exceed 2024 levels by the end of the decade.
It's really important to remember that even though the whole market is correcting, the story isn't the same for every single type of container. That standard dry box is just one piece of a much larger puzzle. Let's take a look at the specialized markets.
So for those standard dry containers, the workhorses of global trade, the story is still all about oversupply. There's a massive fleet of over 53 million of them, and since the ocean carriers already bought up all that cheap inventory, manufacturers are now having to pivot to other sectors like domestic rail.
but is a completely different picture for refrigerated containers, or reefers. This market is absolutely thriving, driven by the growing global trade in things like fruit and medicine. Production in 2025 is going to be one of the highest on record, and the whole reefer fleet is forecast to expand by more than 12% in the next 5 years.
And then you have the specialized tank container market for liquids and gases. It's also showing steady growth, with its fleet projected to top 965,000 units by 2029. It keeps pulling business away from other ways of transport, but it does face one significant risk. Potential trade tariffs on things like chemicals could really put a damper on demand.
So what you should really take away from all this is that the journey of this simple metal box is in fact an incredibly powerful economic indicator. It reflects all these immense pressures: port congestion, geopolitical crises, shifting trade policies, and it leaves us with a really compelling question. In this complex world of ours, is the humble shipping container the truest barometer we actually have of our global economic health?